Greeting guys and welcome to my YouTube channel nenomaila M Traders. You already know. So on today's video I'm actually going to share with you guys the best indicator for scalping synthetic indices, right? So before we get into the video, can you please do me a favor? Can you please subscribe and also hit the notification bell and do like and comment? Feel free to comment and tell me on which topics I should touch next. So overall you can see that we on volatility 25 on synthetic indices from trading view derivative implementation, right? If ever you wanna get access to this platform, you can just simply type like tradingview.deriv.com. It will give you this platform. It's very reliable. So we had this overall trend, right? But then before we go into trends, let me just show you my secret ingredient, my indicator, right? So this is my indicator. Simple moving average. You put your length on 66, your source on close, offset and 0. We care less about these two, right? We care more about this this part over here, the offset and the source and the 66 length. So then you press OK. I use the blue one. You can use red, you can use whatever color you feel comfortable with. So this is my moving average, right? You can get it from just simply coming to this tab over here, rating indicators, then scroll down to M for moving averages, moving average here over here. So I already have it, so I don't need to add another one. So yeah guys, remember we had this higher high, higher low, right? We had this trend being broken over here. Remember it was our lower high, low repeating itself, lower high, low. So if ever we broke this level, the market would surely be telling us that the market is now changing direction, right? Okay, so we broke that level and we went to retrace. So let's see our retracement. So be patient with me guys. Remember to be precise with everything that you do in the market, because then we using real money over here. So you see that it retraced to almost our 78%, but then it turned on our 61 comma, let's say on our 62 Fibonacci level, or let's say our 65 here. So overall we saw that now we in a bullish market. So we got this high, low, right? So this is our third low overall. That's why we now know that the market is now bullish, right? So actually the indicator, this is where it comes in. Every time, I want to say this, every time the market goes on top of the indicator, that's a buy signal. And also the minute the market, your price retraces back but then fails to break below our moving average, meaning that's our other signal that the market is still in a buy market. So let me just add a line over here. Let me also add a line over here, because we wanna scope in. So let's say we don't know price after this line, so we wanna scalp from this area over here. Or let's just scalp from this area. Let's say we had this, so we go to the smaller time frame, like the 15 minutes or the 5 minutes. Preferably I prefer to scalp on the 15 minutes. So this is my 15 minutes chart over here. So you can see overall, even though we didn't know this price over here, what price would do when it got to the other side. So this is what we had, right? So the same principle we apply on the bigger time frame. Since we're scalping, our 1 hour time frame would be our bigger time frame, then the 15 minute will be the standard one, then the 15 minute would be for scalping entries. I mean the 5 minute would be for scalper, sniper entries. So we had something like this type of a channel. If you read the forex trading books, like the basics of a channel, it has to be broken. So let me use this. This is where market gave us a new resistance, and I want it to be visible. Okay, so the market wasn't ready to trend up. So what we do is that we wait for the market to give us at least 2 candles over our moving average, right? So here overall we broke structure over here, wherein it came back to retest. And also let me just show you how I set my SO for this type of entries. So my SO would be somewhere here, if ever I would have gotten over here. But in overall, I prefer this type of entries, whereby almost the 50% of the candle crossed my moving average. So overall you can see that over here the 70% of my candle crossed over the moving average. So I'd enter here, then I'd put my SO here, then I'd target my Fibonacci level. Let me just see which level I'm supposed to target. So this is my TP1, this is my TP2. Let me see if, okay, I didn't set it to give me the TP3. Okay, overall you can see what happened overall. So, and another thing, another tip, right? As long as the market is still over the moving average, we got our first entry here. We got into the market when we were in profit. Then the market retraced to our 60%, 62% area. Let me just be precise with it. Our 61.8% area on our fib, right? It retraced this area over here, and we still over the moving average. So what do we do? Another entry, right? So and also we got our bullish engulfing candlestick over here. So first confluence is that we still over the moving average, and we retraced a previous resistance, turning it into support with a bullish engulfing adding on to our confluences, right? That's our entry. Another, if ever you get another bullish engulfing, that's another entry, right? So let's say you also saw this one over here. It gave us a small pull and an engulfing candle. That's our entry over here. This is your SO over here, or you can put it here. Overall, the market wouldn't have took you out over here. So you wait and see what the market is trying to tell you. So here's another entry. These are all entries because of what? Because of we still over what? We're still over this moving average. This is another entry over here. This is another buy over here. Bullish engulfing, still over the moving average. We bought, then we another entry over here. So as long as we still over the moving average, that's another entry. Another entry. So you see how many entries you got over here. So this was our first entry. If ever you making about $5 per trade from this level over here to here, so you got your $5. You got your $5 over here. You got your $5 over here. That's $10. That's $15. That's $20. Then when you lose $2, right? That's how I do my risk ratio. When you lose $2. So we earn $20, right? We earn $25, $26 over here. Remember, we're targeting which area? This area over here. But then we never got to it. So meaning what? Meaning we lost $2. That takes us back to $23, right? So we now on $23. We wait for another entry over here to this level over here. Another entry. Bullish engulfing, another entry. We're still over the moving average. So 23 plus 5, it's $28. That's $28. So we can't take these entries because of we already had this entry over here heading to this level. You can't trade from this level expecting to come to this level. From this level to that makes sense. So overall we got this. This is a nice entry overall. We on 28 plus 5, that's $33. We on $33 until we break with at least 2 candles being outside, like here. Then I would wait and choose my entries carefully now until I break this level, until I break this trend over here and get inside the trend again. That's why I'm buying again. So I wait for what? I wait for a retest. I got my retest, then that's my entry. So overall, this is how many entries you would have got overall. So you can see how actually it is. Actually, how simple it actually is how to scalp one synthetic index, because you build a relationship with it to an extent whereby you even see things that we as other traders we don't see, because you've built a relationship with that particular index. So overall, I would change. You see, I'd be careful about this type of entries. I'd wait for it to cross this level and get inside, something like this. Get inside, bullish engulfing entry. Same, wait for it to get inside, aiming for this level over here. Got in here. Remember, I'm risking $2. I got in where I got in here. I'm heading to this level. It never got to this level. Instead it went to hit my SO over here. So yeah guys, that's how I in most actually all the time, that's how I trade. That's how I was able to grow a $3 account, because of the basic principles that I use. So over here I wouldn't be looking forward for actually, let me just show you something. I'd start to look forward for selling opportunities, but then going back to my 1 hour time frame. on my 1 hour time frame. You can see, okay, that was just a pullback. Let me see. But then overall, I don't think it was a pullback. This is an impulse. This is a correction over here. This is just a correction. So the market might start to fall at the moment. Just now it might fall. It might give us another touch over here, then fall. Overall, let me see our Fibonacci. It might head towards 88.20% and head down. So it might give us something like this. So yeah guys, that's what I had noticed from the market, what I have seen the market do throughout many times of me back testing the chart, especially volatility 25. So let's go back and check my moving average. It's whatever color you prefer. On length, you just change your length to 66, and if it's on open, you put it on close. If your offset it's on 5, you put it on 0, and then you have this moving average. Thank you for stepping by M Traders Analysis. Do subscribe, do hit the notification bell, do leave a comment, do tell a friend to tell a friend that we have this beautiful chart, this beautiful channel whereby we share this type of knowledge and we grow together in this financial markets. So yeah guys, nenomaila M Traders, peace out.
We chasing people, everybody like you. Man, we hustle every day. We chasing people, everybody like you. The guy in you.